Welcome to the Self Storage Report. I'm your host, Chris Berg, otherwise known as the AI Storage Guy, do land acquisition for Abernathy Development. Join us here today, as always, the one and only Rad Thad, Thaddeus Campbell, was S3 partner. Say that 10 times fast. My co-host here, and then to host some other great podcasts as well. Literally just wrapped up listening to the Public Storage earnings report for Q2 2025. Extra Space is actually doing their earnings call as we speak. So, Eric, I don't know if it's possible for you to sort of find that. Maybe we can bring that up live, or I can try to do my best if we want to jump into that call as well. But I do want to share something with you, Thad. Did you get a chance to listen to the call at all or go through the earnings report?
I tuned into your LinkedIn for a few seconds. Unfortunately, been on a bunch of calls this morning. Had an OAC call that took up an hour and a half of
Yeah,
my morning, so I didn't get to listen to it as much as I'd like to.
since you get the news background like I do, here's my headline from the Public Storage earnings call. I thought Joe Russell Public Storage was Tupac, bro. California love, man.
That's
It was
great.
awesome to hear them talk about, hey, the West Coast is banging right now. LA is going to be all good. It's a little bit down just because of the fire stuff. But I was like, wow, I was waiting for Joe and the team there to start playing some California love from Tupac in the background because they love what is happening in California now. Atlanta, Dallas, let's see, Florida, not so much. What say you, my friend?
I listen. We're gonna look a little later at our friends at Tract IQ, our data partner. I was on their platform earlier this week looking at a site in St. Lucie County, just north of Miami, Fort Lauderdale area, in a town called Fort Pierce, Florida. And you see some of the saturation, and I'll pull it up on Tract IQ a little bit later. But yeah, there's parts of the country where the saturation has definitely taken a massive toll. Are we starting to see a little bit of a bounce back? I think that, we certainly have seen rates start to trend upwards again. That being said, I think as you look at live stock prices, the CEOs can be as happy as they want on the earnings call. Investors are not overly excited with what they've seen from the Extra Space and public reports. If you just look from a straight, what's happened to their stock price in the wake of yesterday's announcements.
Yeah, and I think I'll bring those up just so we can kind of presence those for people. But I think you bring up a really good point. Extra Space NOI overall was down around 3%, which I think is a pretty interesting, if not shocking number. It's very rare you see negative NOI, obviously, within the self-storage space. Now, there could be a myriad of reasons. I think one of the reasons, if you dive into their actual earnings report, and we'll see what Joe Margolis says on the call there today, but was managing expenses. Property taxes are up in a lot of their sites. Obviously, we hear a lot about insurance, what's going on. But I also think, at least what we've seen, Thad, because Public Storage manages our stuff, is that Extra typically has a few more managers or people on site, employees on site. And so you're going to have a little bit higher costs there. And it's starting to impact their NOI. And I think, as you and I have talked about with what's happening with AI, and speaking of stocks, if you see what's going on with Microsoft and Meta today, they had just unbelievable earnings, shot
Yeah.
up 8, 9, 10, 12, 15% after hours. I'm going to suggest a big part of that is because of what's going on. We've talked about earlier where Microsoft laid off 6,000, then it was 9,000. They've been laying off a lot of people
Yeah.
because of what AI is doing, obviously, to replace some of these warm bodies. And you're hearing it from Amazon and different companies. That's the case. So I just
By the
share that.
way,
I don't want to get too speculative here, but I share that where you want to start to look at earnings per share with some of these tech companies, and everyone's like, "Oh my gosh, like look at what Nvidia is doing," and they may
yeah,
still have some room to run as they start cutting headcount. What were we gonna say?
I just was going to say, 15,000 people, many of whom are software engineers, which is not the lowest cost employee in the pipeline of a company like that. So, we're seeing, cutbacks, and we've talked about this over the last few weeks that graduating with a computer engineering degree has a higher rate of a software engineer, higher rate of unemployment than art history. It on a bottom line basis, it's great news for those companies. I guess the overall question becomes, and we haven't seen it yet, is it going to have a massive impact on the overall economy as we see some of these jobs getting slashed? It's going to be an interesting thing to play out. And then, of course, how does that then affect self-storage? Obviously, we've talked pretty consistently about how those life events tend to actually be a good thing for storage. People have a life event that forces them to downsize or find a new location, and they tend to use self-storage.
Yes. And Joe Russell, it's funny that it's Joe Margolis and Joe Russell for Public Stories are, he said, hey, renters are being a big part of their group. I do want to go into dive into some mini markets here in a moment that you and I can take a look at and just look at. I'm a big believer. Hey, let's look at NOI. In my opinion, that's the number that really, really matters at the end of the day. But as you mentioned about the stocks, I'll share that. And then I do have the call that we can bring up here from Extra Space. But this is Extra Space right now. You can see, big drop today. Clearly, the street not really enjoying what they're hearing or at least seeing from these earnings. This is Public Storage, kind of the same thing. These stocks
Yeah.
have not been outperforming by any stretch of the imagination anyway. So I guess we'll see what this, leans into for the rest of 2025, which it's when I looked at the earnings, I didn't dive into the speculation as much, but it's pretty soft. I think because you and I talk about the real estate cycle so much, this one is an interesting chart, in my opinion, because we've talked so much about housing stocks and how those can be key indicators and key leaders of what's coming up over the next 24 months.
Yeah.
Well, ITB is like the housing ETF, right? So if you look at this is DR Horton recently above the 200-day moving average, which is always a really important trend. You think, oh, that was good. Well, now they're coming back down below that because they just recently announced decent earnings. Same thing here, but I do want to go back to the ITB as the ETF, and you can see here they couldn't break that 200-day moving average mark, which is obviously always an important point of resistance, which for me, as you and I have talked about, there's that kind of that peak that happened in September of 24, then it goes down and it tries to hit a peak again and just can't quite do there. I'm not saying this is it. I'm just saying, hey, this is a really interesting resistance point to be, keep your eye on and go, is this thing going to bear out the way you and I have discussed, where housing stocks just don't regain the steam and thus the economy starts to go in another direction? What say you, my friend?
Yeah, I've listen, I think we've laid this out pretty clearly over the last 3, 4, 5 weeks, and nothing that's been happening in the overall situation has lent any data to suggest otherwise. And quite frankly, it's a big deal for me as I'm looking daily at sites, whether to look for a storage build or to look for a small bay industrial flex. There's a lot of markets in the country where there's literally billions of dollars of residential development in a 3 mile, 5 mile, radius. The question becomes, are those sites that are in conceptual phase, that are in design phase, are we actually going to see them go through and get to actual construction? I'm putting a lot more weight today on sites that are already in a bidding process or already under construction than I am something that's conceptual or something that's in a design phase. Whereas a few years ago, if something's in a conceptual or design phase, you have a much more high level of belief that it's going to get down the road. I think today you have to take everything that's not actually all the way through to construction, even things, and we're seeing this in self-storage all the time, things that are fully permitted sites that aren't going anywhere, right? They're sitting there, fallow for lack of a better term. It's like a field that's not getting planted. And I tend to believe that that's what we're going to see played out over the course of the. I had to use a little farm reference. You're from North Dakota, man.
Bro,
You should be
did you
used
just
to
bring
some
out the
farm
word?
references.
Did you just bring out the word fallow?
My dad grew up on a potato farm. Yeah, gotta use the language every once in a while, for
The
sure.
thing I love about the self-storage report, we could just call the SAT test. Like you are incredible, man. Like
I
fallow.
appreciate that.
I have no idea what fallow.
A field sits fallow when it's not planted yet. I gotta use that in a sentence so somebody knows what the heck I'm talking about. Yeah, listen, I to the point. I think we're going to see a lot of that over the next couple of years. You're going to see some pretty massive residential housing projects that don't get built because there's just not enough demand to move those units. And listen, that puts people when you're talking about hundreds of millions of dollar projects, the design phase costs hundreds of thousands, millions of dollars, and that money's going nowhere. And so, do I feel like there's going to be some more pain in the economy? I certainly do. I'll tell you this: I want to call up a graphic real quick that just illuminates how even maybe a little more starkly and just to illuminate your point, just a one line graph to keep it simple, 288 at 4:30 yesterday down to 274, right? So you've had a $14 drop in their stock price. Extra Space even more stark, right? Almost the same price drop, 149 down to 136, but a much lower stock price, so a much higher percentage drop. They're down almost 10% on that earnings report. You and I still feel the same way, though. I think this is a short-term hit. There's been a few things that have happened over the course of the last year, year and a half, things that Extra Space and public have no real control over, and are affecting. You can't control what happens on a municipal level with property taxes. You can't control, as Public Storage and Extra Space, what's going on with your property taxes when there's wildfires on the West Coast and there's tornadoes in the Midwest and the Sun Belt and there's hurricanes in Florida, which is a strong percentage of their presence, and those increase costs on the bottom line. At the same time, when there's been some negative pressure on pricing, we're seeing it play out with the way the market's perceiving these stock prices. I'm going to stop sharing
Yeah,
my
I
screen and
agree. And
come
I
back to
think,
you now.
the one nice thing about storage, and Joe Margolis mentioned this in Newport, is look, it's always been a long-term investment. It's not a 5-day, weekly, even on a year-to-year basis, right? You're kind of like, okay, this thing moves pretty slow. It's just big picture to me, and as the more I get educated in the space, is like, okay, what's the supply at, and can we keep digging away, plugging away? Because even today, Joe Russell from Public said, look, we still love, like, the highest return on capital for us right now. I don't want to misquote him, but it was pretty much this, like, the highest are still our development deals. We still love, the return on capital we're getting on our development deals. So I say that because they see it. We continue to see it here at Abernathy. And hey, what can I do to continue to just find the right pieces of dirt, get someone creative, and build these things in really low supply areas? So if you don't mind, man, because I've got this brought up, I want to dude, it's so funny because you've got your news background. I feel like you and I are about to, okay, let's go live right now to the Extra Space Q2 2025 earnings.
You went
Right? Let's
NPR
go to our
voice on
reporter
me.
on live. Thad's live on the scene at the Extra Space quarter.
Drags on your
Let's jump in
overall
and see what they have to say.
So I would say that's a more significant driver than any change from an ECRI perspective. Really, that's been pretty constant on a year-over-year basis.
Thank you.
You bet. Thank you.
Your next question comes from Samir Kanal with Bank of America Securities. Your line is now open.
Yes, good afternoon, everybody. I guess, Joe or Jeff, you sounded, in the opening comments, you talked about the progress is being made, but you also said it's sort of gradual and maybe, I don't want to use the word softness, but it feels like maybe it's a bit lighter than you expected. Maybe just talk or expand around that. I guess, what do you think is sort of driving that gradual sort of movement here?
Well, this is Joe. I think there's several things. One is, as mentioned at the previous question, we turn 5 or 6% of our customers a month. So it takes time for improvement in rate to build up in the rent roll and show it. We also have a roll down, and that again takes time to work against that. But this isn't a month-to-month business, right? This is a long-term business. The trends we're seeing are positive. To be positive in customer rate for the first time since March 2022 is a meaningful inflection point. And we rode down the hill, and we're looking forward to riding up the hill now.
I mean, obviously this was
The
my total
Nostradamus report is back.
I'm just gonna say, man. I mean, the fact that we just said, "Hey, look, this isn't a month to month, but it's a," and there's CEO of Extra Space. They got the most.
By the way, that was live. That wasn't like Chris
Yeah.
queued that up and decided to go at exactly that point. As you could probably tell, because we queued it up, we wouldn't have gone in the last 15 seconds of an answer that we had no context for. Worked out absolutely perfect. Then he says exactly the quote you just quoted from Public Storage, Joe Russell. That was very well done, my friend.
I mean, that was just absolute. So again, you can see, I think what's interesting though is, and again, I don't have the right context here, but I will share just some things. Having a conversation yesterday with a broker, is that it sounded like in Joe's earlier comments, this transition with Life Storage and that acquisition maybe has been a little bit more challenging than they anticipated. to the point what I heard yesterday, and then also saw a LinkedIn post on it where they're starting to maybe sell off some of those assets. And I think they're starting to look again at their portfolio. I think Joe Margolis is phenomenal at mitigating risk. And they're going, yeah, you know what? Maybe we've got a little bit too much of a footprint in this particular regional area. Let's sell some of these assets and reallocate that money where, again, we can get a higher return on capital. So I don't want to put words in their mouth. Again, I have not had a chance to dive into this. I'm just doing some speculation based on some things I'm hearing and reading in the earnings.
Couple interesting factoids I've discovered as I'm digging into the earnings reports and historically going back and kind of, looking at not something I did a year and a half ago before we started this report. So thanks for that, because it's made me a much better investigator of what's going on in our industry. But if you compare 2024 second quarter to 2025 second quarter for Extra Space, the thing that jumps out immediately is they took a $57 million write down on their valuation of Life Storage last year in the second quarter. So they actually showed a significant increase in overall net operating income company wide this quarter versus a year ago is like 37% or something like that. Why? Well, because they had to write down $57 million of unrealized, it wasn't money, but it was their overvaluation of Life Storage when they did the merger that they then had to go to investors and say, hey, we've got to account for this somewhere. They took a massive hit second quarter 2024. To your point about those assets now, how they're understanding, is that to say the merger was not long term going to be fruitful for them? I think we're still going to see that play out, but definitely you've seen that it's created some short term pain. Maybe the timing of that merger certainly didn't help anything when you see what happened to occupancy shortly thereafter and how that really changed how the algorithm was setting pricing structures. And listen, we've talked about this also when you're refinancing a project at 6% versus 2.5%, 3%, how that affects the overall valuation of an individual facility. All these things are coming to play in terms of the overall valuation of what's going on. Second interesting factoid I want to share that I discovered that I thought was fascinating was the US dollar's actually gained strength against the euro over the last 6 to 8 months. That actually cost Public Storage a significant amount of money. They took $100 million loss on the valuation of the US dollar versus the euro. Sureguard Storage in Europe that they're heavily invested in, they have loans to, it costs them more money to service that loan now because the dollar is stronger against the euro. So one of those things where just looking from a global perspective, where some events that the incredible leadership of these two companies have no control over, right? Like Joe Russell's not affecting the value of the euro versus the dollar in any way, shape, or form, but has a staggering impact on Public Storage's overall income level. $100 million hit, I don't care what you're dealing with, is a pretty massive impact. So to our point, go ahead.
Is Sureguard in Australia, or is
Is
that
it
in?
no, they have a different company. I can't remember the name of the company. I'd have to go back and look at my thing, but they're heavily invested in one. I think Sureguard is in Europe, mostly in Western Europe. That's my understanding of it. Could be completely wrong, but that's an investment that Public Storage involved in. And then there's a separate entity, I think, in Australia. I'd have to go back and look. I didn't keep my notes in front of me. If I was
Yeah,
as good of
I
a
don't
news
either.
reporter as you were.
But I think you're right. As I'm trying to do just a quick Google search here. So, but you bring up a really interesting point that I forgot to mention: the fact that they were the loss of capital just from the euro versus the USD was like, oh, that's an interesting dynamic right there. Which again, I think to look at how, and I did not get a chance to peruse Extra Space as well, but if you look at how Public is managing expenses, it seems like they're doing a pretty darn good job, even with that $100 million transition from the euro to the dollar, to minimize, their operations, and their NOI was pretty much flat, from I think year over year, at least quarter over quarter. So, anything else you want to add there, Thad?
Couple things that jumped out at me too. First of all, you talked about Public Storage building ground up development. Obviously, that's what we do at S3 Partners. We're heavily involved in that side of it. 200,000 square feet of ground up development that they have in the works in the second quarter. $64 million for those 200,000 square feet, which works out to somewhere north of $300 a square foot to build, which that jumped off the page to me. I don't know where they're building those. I mean, if they're in downtown LA and downtown San Francisco, then God bless. That makes a little bit of sense because the cost of the land and build costs are going to be a little higher. But the fact that they're moving forward on $64 million on two projects tells you the return they believe they're going to get on ground up development. The other thing I wanted to point out very quickly is that Extra Space put another $100+ million of loans out last quarter, and they only sold off 7 million of loans. So, deployed net over $100 million out into bridge, mezzanine, whatever those loans might look like in their structure, out into the loan field. So we talked about this a couple weeks ago that it's very clear that the two companies have a little bit of a differing strategy as far as how they're moving forward with their capital.
Yeah, you brought up the development aspect. This is from Public Storage. You can see here an asset in California, $229 a foot. This one was just, we were looking at it today with my
400.
team, like $400 a foot in Hawaii is like, okay, that's a different,
That
that's a
makes
different game
perfect
right
sense.
there.
Getting steel to Hawaii is a little different than getting steel to Georgia.
100%. But still, I mean, like, what the rates need to be to make that thing actually underwrite and work is like, all right. Real quickly, just to run through this, because I think it's interesting to take a look at kind of the dynamics that are happening across the country. And I wanted to use year to date through June 30th, 2025, but you can see LA here from an NOI perspective, again, up just a little bit. They talked about it a ton on the earnings call. Big part was because of the caps due to the fires, but then San Francisco's been performing well. They talked about DC. I think
New
that
York
what's really
numbers fascinating to me that they're losing NOI in New York City. I would like to dig into that a little more because it's certainly not because of a massive increase in supply. As a very hard place to get things built.
Yeah, I couldn't put a finger on that, but I think that the Dallas Fort Worth ones, I mean, down 7.8%. Then you've got West Palm Beach, obviously in Florida, Tampa down 4.3. There's some pretty staggering NOI numbers in my opinion. San Diego 1.1, which is great to see. Phoenix, we've got some great assets in Phoenix, and I thought this was going to be a much bigger negative number than 0.6. So that actually, I think Phoenix is sucking up the supply a little bit more efficiently than I, maybe originally anticipated. So just some interesting, the one thing that's missing here that I was hoping, and I think Armand does a good job of jumping into this, so maybe he knows where it's at, but I was hoping to see Vegas, and maybe I'm just missing it, but I'm not seeing Vegas on here, and I'm curious how the Vegas market's performing. So
Fascinating to look through that and see some of the places where you would think. Shout out to my buddy Tony Artizzoni, by the way. Legacy built out of Phoenix, Arizona, has built a good chunk of the self-storage facilities that have been built in that market over the years. I know that number has to make him feel pretty good. I don't know what's going on in Las Vegas. I'm interested. I teased earlier that I'm going to show, and I actually put it on the screen thinking I was sharing a different page, but want to show you Fort Pierce, which is outside that Fort Lauderdale market. Will give a little light onto why some of that Southern Florida market is struggling so much.
here's Vegas and Extra Space. Let's do it quickly before you go there. So down 1.1, again, not great, but not as horrendous as it could be. Phoenix 0.5, but they talked about it in the public. Dallas is just not performing well. And I want to share with people, when I first came into the biz, how do I get you back up here?
I'm here.
Everyone,
You
even
got me.
today, people were like, hey man, are you in Texas? Are you in Texas? And I said to them, I said, Texas scared us. And you and I talked about this. We're just any Tom, Dick, and Harry can be like, I can build that. And they're like, well, do you have a license? No. Well, okay, let's build it. And you're just like, wait, that's not good from a supply perspective, or at least have any kind of moat. And a lot of people kind of laughed at us, like, what are you afraid of Texas for, man? Like, which again, Texas may end up being fine, but when I see minus 12.8 NOI over the last 6 months in Dallas, Fort Worth, it's like, whew, glad we're not dealing
I'll
with
tell you
that.
something. As I'm looking at flex as an alternative to storage, Dallas and Houston have massive amounts of small bay flex being built relative to the rest of the country. And one of the reasons I believe that is there is because those two markets have been oversaturated for storage for a long time. And it's, listen, Dallas not so much as Houston. Houston literally has no zoning code. So if you have a parcel of land, you've got to follow rules, but you can build whatever you want on that parcel of land as long as it fits within the strictures of height requirements and setbacks and FAR. So Dallas a little bit more, tough zoning challenges, but to the point, ease is not always your friend when it comes to development, right? Some people seek that, hey, I want to go find a site that's use approved and it's going to be easier. That doesn't always mean that in the long run that you're going to have a better, I looked at, if you looked at San Francisco, I think they were up 3.9 or something like that, right? One of the hardest areas of the country to go get zoning taken care of. And so, to illuminate your point about Texas and yes, easier to get things done, does that necessarily translate to profit at the end of a project? Look at the numbers and they speak for themselves for sure. I want to pull this
Let's
up.
dive into your Florida. Yeah.
I want to pull this up real quick and share. This is Fort Pierce, Florida, a site I actually was not looking for storage. I was looking at it for a small bay industrial flex, but it really illuminates some of the point we've been talking about. This is obviously a 1, a 3, and a 5 mile radius around it. I want to shut off the housing development toggle that I had turned on, and I'm going to turn on. Of course, the little window with you in it is sitting exactly where I don't want it to be to hit other buttons on the screen. That's the fun of video conferencing in 2025. You can see how many yellow pins there are on this map. It is absolutely unfathomable. So if I go into this 3 mile and I see 8.57 square foot per capita, not immediately a turnoff in Florida, where in a lot of places there are people from the Northeast that go down there and have second houses. They don't necessarily count in the population. So that's not an immediate no-go. 43,000 population, not exactly as strong as I might like to see it. But again, it's Florida. So how much of the population's unaccounted for as people that have second houses down there? 69,000 median income. Again, not terrible in any way, shape, or form, especially when you factor in people that are retired that aren't earning any income and pulling that average down. This is where it starts to get really crazy. Look at the number. I'm going to go back up again and I'm just going to highlight total gross existing square footage in the 3 miles, 409,000, 372 net rentable. Let's look at the development pipeline. By the way, 2 days ago when I looked at this was 4. There's since been a 5th development added into the pipeline. I kid you not. This was 4 when I looked at it 2 days ago, and it was 430,000 and like 320,000 of net rentable. There's since been another 130,000 net rentable and 160,000 square foot facility. There's more square footage in the pipeline than there is in the 3 mile radius existing. By the way, a population of under 50,000 people. Now, for those of you guys that aren't really familiar with development, I figure I need about 6,000 people to fill a 100,000 square foot facility based on square foot per capita national average, right? If I have 6,000 people that don't currently have good access to storage, I feel pretty comfortable. Well, here's the reality in this market. Without any new development, there aren't 6,000 people that need storage today. And I've got 600,000 square feet in the pipeline. Now let's go down to a 10 by 10 rental rate. $1.38 for climate control, right? So if you play that over the course of a year, you're under $17 a square foot. Right now, as a rough number for me to think something's going to pencil as a ground up development in a place where I can build economically, which is not necessarily the southeast coast of Florida, I need to be at 22, 23, 24, even $25 a square foot per year. I need this number to be at $2 and it's at $1.38. And yet I have 5 different development deals in a 3 mile radius. Quite frankly, Chris, it's mind boggling. I'm excited next week. Noah Starr is going to make his debut on the show with us next Thursday at 1:00. And we're going to talk about this a little bit because I talked to some of the people that have been in this game for a long time. Obviously, my partner, Barry Sherman, we're going to the 50th anniversary of SSA show. It will be his 28th SSA show that he's been to, 28th year of SSA shows, right? Even better than that, Mike Burnham, who I'm actually meeting with later this afternoon from Storage Mart, was at the very first SSA show. I talk to these people that have been in the industry for a very long time, and we talk about this asset class and how cool people are and how nice they are. And one of the things Mike Burnham said to me many years ago, he was on the podcast, and he said, "Thad, I'm nice to people because it hurts my business if they do the wrong thing. I'm going to give them good advice and I'm going to share every bit of knowledge I have, because if they open the wrong store in the wrong place with the wrong unit mix, it has a negative effect on my asset. So I don't know how much more strongly to say this to the people out there that are developing. Talk to the other people that are around. Do your due diligence, call other developers. And if you look at a map and you see a bunch of new development in the pipeline, there's a reason that the markets that you showed that are having negative NOI growth are having NOI growth, negative NOI growth. It's because of overdevelopment. It's because people are bringing facilities into that market where they don't need it. And you know how you know very quickly? The prices that people are paying to rent their stuff will tell you almost immediately whether or not that market needs new storage or not. That's enough. I'm getting down off of my pulpit now. I'm going to step back.
But I mean, it makes it, a basic game. We've talked about it many times here before. Sam Zell, supply and demand. If you can just sort of follow that, and I want to make one quick anecdote to help people understand. I think one of the things that helped, Brett Henry and I to build a relationship is that we were going to build an asset in Elk Grove. We ended up saying no because he had a giant store opening just literally across the street of like 250,000 square feet. I saw him in Napa and it's like, hey man, great asset in Elk Grove. We were going to build right next door. We said, no, we don't have that one. I have that fight. And you could tell he's just kind of like, oh, okay, thank you. And I think that was sort of an endearing moment where he was like, all right, this guy's okay. I can talk to this guy. Okay. Cause, so I think it's important that you just understand you got to really have a long-term game, just like Joe Margolis said a few moments ago, in this space. So, I want to give you the last word. That anything else you want to add or share?
I'm going to just beat this dead horse. I was looking at a site in New Jersey, and a buddy of mine is developing another site about 6 miles away. The last thing this area needs is more storage. And the guy trying to sell me the site, when I tell him that I'm not going to build it because my friend's building a facility down the road, says, well, what price would we have to sell it to you at to make it worth your time? And I'm like, no, you're just not understanding what I'm saying here, right? Like, I'm not building this site. The area just doesn't need more storage. There's already more supply on the way. I've said it enough, but I'll say it again. Just be responsible in your development. Just because there's hundreds of thousands of dollars of fees that you can gain, just because there's potential for profit, doesn't mean it's the right thing to do.
Hey man, let's just jump one last minute here into the Extra Space column to see if there's anything interesting that we may want to expand upon.
So
There's been a good amount of volatility in the stock recently. Can you just remind us how you look at buybacks versus your cost of capital and other uses of capital today? I think you bought a small amount of stock around 126 earlier this year, but the opportunity went away quickly.
Yeah, that was an interesting day where we had about a 2-hour window before the president announced a pause on tariffs and we got out of our price band. So the board of directors, approves a certain band of pricing in which we'll use capital to repurchase our stock. And as you point out, it's a capital allocation decision, and we've done it in the past, and we're certainly not afraid to do it in the future.
All right. And then you mentioned the impact of AI on search and how maybe that's not going to make sort of these Google search terms is a good proxy for demand. I guess, do you have a sense for what percentage of your customers are using ChatGPT or AI to find the best storage solution versus, like, say, this time last year or a couple of years ago? And do you think that makes customers a bit more sensitive on the front end to pricing just because they can sort of quickly analyze, the cheapest option within a certain area?
Yeah, I'm going to apologize. I don't have a lot of good answers about this. This is changing so quickly, and we have a lot of people who are a lot smarter than me spending a lot of time trying to figure it out. I mean, in the beginning of the year, 15% of searches came up with a AIO at the beginning of it, and now that's over 65%, I think, in 6 or 7 months. So we're trying to understand and take advantage of the changes that are going on in the search landscape. But I do have confidence in our team and our ability to be out in front in this.
Eric, one piece of color that I would add is, while it does definitely create some noise in the data in terms of searches, One thing that we've noticed is that a lot of the types of inquiries customers are putting into ChatGPT and other AI models are more informational in nature. So if they were wondering what size of a unit to rent or the benefits of climate controlled versus not, et cetera, that's a good place to get those common answers. But customers that have the intent to transact still are tending to click through and are going to websites. So we've seen, while it maybe gets a little murkier on just a total traffic from a traffic standpoint, the conversion rates for those customers that are clicking to the website have increased. So again, evolving very quickly, like Joe mentioned, but something that we're tracking very closely.
Got it. That's helpful. Thank you.
Dude, how about our guy from Citi dropping a couple of good questions right there, man? You can be buying
That
back some
was
stock.
Listen, I thought that was a very fitting way to end the show today with the AI storage guy at my side with the question about AI. Fascinating statistic, right? And Joe dropped it quickly. 15% of searches coming from AI-driven search engines at the beginning of the year. 60% in 6 months. Talk about the speed of change that we're seeing in our world. It's it's going to be interesting to see. And I certainly agree with Joe. If I'm going to trust somebody on the technology front, Extra Space has proven to be very strong there.
Well, I think you said, hey, we've got a higher conversion rate. And one of my great marketing mentors always said, he who educates the market dominates the market. So this AI to Google thing, I mean, I think they've got so much data, they potentially could be well positioned to, go and, speaking of stock, watch their stock do something. Again, not investment advice, but OpenAI just did such a great job of being that first in your mind, right? Like I'm going to take that position in your brain. And so that dynamic.
When you think AI search, you think ChatGPT.
Let me finish.
Sorry about that.
When you think of, search and AI, like that's just going to completely change the game of how things are going to be done. And so that dynamic to me is going to be a really, really interesting one because right now AI is not ChatGPT is not monetizing that. So if I can go there, to get the information I want and then just click on a button and go right to the website, I think that dynamic is going to change pretty dramatically.
Yeah, I agree wholeheartedly. One way or the other, it's going to be absolutely fascinating to watch. Chris, as always, thank you. I just want to give a plug again. Our data partner, Tract IQ, Noah Starr, is going to be appearing with us once a month next week, Thursday, 1 p.m. Eastern, 10 a.m. Pacific. Will be his first journey into the self-storage report world. Very excited about that. The following time he's going to come on is actually going to be live at the Self Storage Association fall event in Las Vegas. So that's going to be a lot of fun. Chris Berg and I will be live from the show floor in SSA in Las Vegas. Still working out a little bit of logistics about that, but we'll get that all figured out in another. It's hard to believe it's only 5 weeks away, but Chris, as always, incredible preparation. Thanks for bringing so much data and so much knowledge to the show.
Dude, you too. And can you maybe whisper in Mike's ear and say, hey, you want to join us on the self-storage report and see what he says?
Who's that? Mike Burnham?
Yeah, he would be fantastic.
Yeah, absolutely. I will. By the way, I don't mean to name drop, but I got 2 meetings this afternoon. One's with Mike Burnham, the other one's with Brett Henry. So I thought that was kind of funny that you brought him up.
Dude, tell Brett I say, wait, what's up? And everyone, thank you for joining us here. Again, this is a self-storage report. Please share this with colleagues, family, friends. We'll see you back here next Thursday. God bless and have a great day.